So if the market is not being allowed to determine the fair value for debt, nothing is real. We're going to have a scenario where all of these extra printed bills are going to chase the same amount of goods. And you do not have to be a rocket scientist to figure out what that means. And you're going to see a huge amount of cash, again, move into precious metals. Again, it's the environment. We're going from a risk-on environment to a risk-off environment, to put it in the most simple terms.
The most significant results encountered for this Canadian mining region in over a decade, with a Canadian Mining Hall of Fame legend at the helm for more discoveries statistically than 1,000 geologists combined. This is the one hard asset stock to research right now. Learn more at crushthestreet.com/hardassets.
Hello, everyone, and welcome into crushthestreet.com. I'm joined today with Greg Mannarino of traderschoice.net. He tells it like it is, and he's a leader in the investment community, a returning guest. And I want to start off with silver here. Greg, how are you doing today?
I am doing great. Thanks for having me back again. I really enjoy your show.
Greg, silver has been running as of lately. It's sort of lagged gold here. We saw gold have its big move, and silver, was in the $13 range. From its low in 2016 to its high, it's up like 25% in just a matter of months. I mean, is this starting to confirm a bullish trajectory here?
I would have to say yes, but what I want people to focus more so on is the dollar. Look at what's happening to the dollar. It's continually being pressured. It's under pressure now, and that is not going to stop, in my opinion. And so this bodes very well for these assets, which are units of wealth. They're not units of debt here. I think people are starting to get it. But what we're going to see here, and I think this could be soon, within maybe even the next few weeks, honestly, we're starting to see the market here fall under some pressure. Just today, for example, the technicals supporting the market literally flipped on a dime. On a dime, we had an incredible run-up for the past month and a half or so with regard to equities. And now we're starting to see these technicals deteriorate. We saw a run to safety, quote unquote, which is debt, which is why anyone on earth would think that the bond market is somewhere to be. You got to be nuts.
Right.
But again, I think this is going to continue the strength in gold and silver here. And I also believe that the powers that be, quote unquote, are going to attempt to suppress this. We understand that just today, or was it last night, I believe, someone or some entity dumped $2 billion worth of paper contracts onto the market using a market order. I mean, look, when you see this kind of stuff, it cannot be real. Anybody who understands trading, even at its most basic level, knows this one thing. You never sell anything or buy anything, for that matter, with a market order. When you issue a market order, that means you're willing to take anything for your asset. I mean, you got to be crazy. So when you see this, when you see market orders dumped like that, this is fake. It's not real. Someone is deliberately trying to pressure it lower. I mean, for example, would you offer your car for sale and just say, okay, give me whatever you want for it? Of course not. This is what they're doing. So when you see this stuff, it actually brings a smile to my face, I'll be honest with you, because this is just frank manipulation that cannot stand. It will not continue. Now, keep this in mind. We have existed, since the 2008 event in an environment of risk being deliberately fostered by the Federal Reserve, who continues to suppress interest rates. So you got nowhere else to go but in the market. So they reinflated a stock market bubble on the back of a debt mega bubble. So right now, again, we're still in this risk-on environment, where this may change relatively soon to a risk-off environment. And when this happens, and it will, you've seen this over and over and over and over again in history, we're going to get precious metals skyrocket, period. That's the way it's going to play out here, and I cannot imagine another way.
Greg, last year you called the top, basically, right on the spot. and it has held up all the way until now. And I know you did a video recently. You were talking about your concerns about the market actually going higher and making new highs. So I want to get your latest thoughts on this.
Exactly. Yes, that's true. Last May, almost to the day, it was a pretty amazing call, I have to say. It has held this entire time. I did say that I believe that top was in danger. However, I'm sitting here looking at charts today, which I always do. I go blind looking at charts here and and indicators and a whole bunch of things. And it looks to me, the way things have changed today, I mean, we saw a dramatic, and I can't stress this enough, deterioration of technicals. I literally watched it before my eyes and I'm going, wow, what is going on here? So what that tells me, again, watching the bond yields today too, that's what really started this. When we saw the bond yields move today, the 10-year, I think 10 basis points in a matter of an hour or so, I was like, what happened? What's going on here? I always look at that. It's so important to understand the bond market because it's the largest aspect of the market, the largest part of it. And all of a sudden, the technicals started deteriorating. I'm like, whoa, okay, something's going on here. The market's trying to tell us something. So what we had today, we had a triple-digit sell-off in the Dow. This may be part of something bigger, especially if I look at the longer-term charts. And I was looking at that just prior to this, our interview here, looking at the weekly chart of the S&P 500, looks pretty ugly right here and right now. So there also could be a seasonality that's effect that's playing into this. The sell in May and go away. We're getting there. So this market may be ready to take a hit. And I'm actually short this market now. I bought puts on SPY, specifically August 210 puts. It's available on my website, and you can see my positions. I have them right there. And let's see how it unfolds. I think it's going to be interesting.
Greg, we got the velocity of money at ultra lows here,
yeah.
And we're talking about inflation. We're talking about how that's going to impact the dollar, the stock market. Mm-hmm. So I want to ask you, could we see the markets go into hyperdrive and hit unthinkable highs in nominal terms like stocks have seen in inflated or hyperinflated environments, such as Germany, where the stock market went from like 1,000 to like 100 billion marks in an inflated environment? And it's worth noting that even in US dollar terms, the market still went up, and that kind of goes to show that people are just trying to get their money out of the currency and throwing it in the market. So I'm wondering, as a safe haven, I know this is going to sound kind of counterintuitive, are people going to go into the stock market for the cash diversification?
No. This is how I see this scenario unfolding here. It's very, very simple to understand, really simple, and I'll try to lay this out. Let's just take today as an example. Today, we saw the U.S. 10-year yield jump, I believe, to the high of this year, 1.87, 1.89, or something around like that. So when you see this kind of action, this safety play, from nervous investors and traders pushing cash into the bond market, well, that reprices everything. So just think of it in these terms. We've existed in an environment where interest rates have been artificially suppressed that has fostered a stock market bubble, okay? Because investors and traders have nowhere else to go. It's a deliberately created risk-on environment. Now, when this starts to unfold here into a risk-off environment, you're going to see a run for the hills. In other words, you're going to see bond yields spike, which is going to put a huge amount of pressure on equities. Now, the Federal Reserve cannot go out there and buy every bond to continually suppress interest rates. The free market will overpower any entity's attempt over time to rig it. And that is exactly what's going on. The interest rates are being rigged. The bond market is rigged. Everything is being distorted because of that. There's no price discovery mechanism here whatsoever. Again, equities are in a bubble. So we're going to see bond yields spike, which is going to have the opposite of what we're seeing now. When bond yields spike here, we're going to see pressure on the market. Now, I'm not saying it may still go a little higher here because of this inflationary effect you're talking about, but over time, when people start to realize that this whole thing is just some type of a twisted game in many ways to foster and the stock market higher, because this is where people need to look by the establishment. In other words, people don't care about the economy. If they believe that the stock market is going higher, they think the economy is doing well. So the scenario is very simple. Cash never goes to money heaven, despite what many people might say. It simply goes from one place to another. So we're going to see a flood of cash moving into quote-unquote safety, which is the bond market, which is obviously not a safe haven because the debt can never be paid back. We know that. So when the bond yields spike, that's going to put pressure on equities again. It creates that risk off. And you're going to see a huge amount of cash again move into precious metals. Again, it's the environment. We're going from a risk-on environment to a risk-off environment, to put it in more simple terms.
So do you anticipate the velocity of money staying at ultra-low levels in a collapse environment? I mean, are we going to see deflation first?
I think we're going to see, this is what I've been worried about, honestly, and in fact, I think you're referring to a video I just did here. I believe, again, and just going back to your point, we are at a near 4-decade low with regard to the velocity of money. So what people need to understand, at again, its most basic, I guess, level, is we have all of these printed bills or digital bills that are existing. And they're just there. They have not made their way over to the consumer side of the monetary base because of the money velocity. Now, at one particular point, and I don't know what the trigger is going to be or how it's going to play out, we're going to have a scenario where all of these extra printed bills are going to chase the same amount of goods. And you do not have to be a rocket scientist to figure out what that means. So we could see, again, the velocity of money start to pick up as people are looking to dump dollars, okay, or looking to acquire assets. So this is, I don't know exactly how it's going to unfold. It's yet to be seen. But I can't imagine a scenario, and I don't think we've ever seen one in history, where eventually all of these extra printed bills, or whatever you want to call them, these fiat pieces of paper, go chasing the same amount of goods. And that is going to create a very dangerous environment.
Yeah. No, that's very true. But I guess my question is a lot of this money is sitting on banks' balance sheets, and how do you suppose that that's going to come off banks' balance sheets and enter the economy to cause inflation? I know you talked about people consuming and people spending, but what about the money that's on the banks' balance sheets?
Well, we're going to speaking on that, what people need to understand is a lot of these bills don't even exist here in the United States. They're outside the country. And I believe, again, this is the scenario that people are not going to want to hold dollars all around the world, and they're going to start dumping these things. And you're going to start to see cash move at that particular point. Wherever the cash may be sitting on banks' balance sheets or whatever it might be, there's going to be a crisis here in the banking system. It's just a matter of when it hits and how it hits. Now, all of this, remains to be seen. All we have to know here is we're existing in an environment of make-believe. And again, the world central banks, they are becoming so desperate here. What have they done? They've turned the entire financial system upside down. We have negative interest rates in parts of the world here. So there's something, and I'm not sure what it is going to occur to start this cash moving in the direction, again, of the consumer side of the monetary base, whether it's rushing back here to the United States because they're being dumped by other countries around the world, or something. We're already hearing Saudi Arabia threatening to dump U.S. debt. I mean, there is some event that's going to occur that is going to trigger that. But at its core here, what people need to understand, in fact, I did a video about this today. It won't be out until tomorrow unless you go to my website, traderschoice.net. All my new videos are being posted directly to my site. This video that I did today will be out tomorrow, where I actually speak about what is actually occurring. I'm losing my train of thought just a minute here. All of this collapse that everyone keeps talking about, what is it? What is the collapse that everyone is talking about? Well, just very simply, it is simply the market which is going to dictate fair value. All of this is going to simply correct to a fair value. So that's what the collapse is. The collapse is this distorted market, every aspect of it, whether it's the currency market like we're talking about, or the debt market like we're talking about, or the stock market and precious metals. All of this has been twisted and distorted because of the actions of world central banks. Now, this will correct to fair value. It is an absolute certainty that this will happen. And how do we know this? Because we've been here before. If you look at every single economic and financial bubble in history, they all have one thing in common. That is, they burst. So this environment of the make-believe is simply going to correct to fair value. So that's going to feel like a collapse, but all it's doing is correcting to fair value. So I don't think anyone's putting it in that perspective, anyone besides me, honestly, that the collapse is simply the market establishing a fair value, which is going to happen. It is a mathematical certainty. When? I'm not sure. We're going to start seeing this now. Because, again, the environment we're in, the multiples in this market cannot be justified. They cannot be justified. We have an earnings season that is absolutely pathetic. And the only reason why stocks aren't falling precipitously right now is because the dollar is getting weaker. So that plays into this as well. But all of this simply cannot be sustained, and it will correct to fair value.
So, Greg, going back to precious metals here, we talked about silver, and you brought up the manipulation, the contracts that are being, created here. Are you concerned about the levels and the move that we've seen here in precious metals? And do you think that they're going to hold up? Are these further confirmations that we're going higher from here? The momentum is in the right direction, or is the manipulation going to take it over and likely bring it back down?
Well, I think they're going to try like they did today. By dumping contracts onto the paper contracts onto the market using market orders. It's unbelievable. So again, I laugh when I see this kind of stuff. And are they going to try to do this? I absolutely believe they are going to. But again, just look at this as opportunity, because we know this cannot be sustained. They can do whatever they want to do. They can twist it. They can manipulate it. They can do anything they want. At one particular point, it is the free market that will determine fair value. And unfortunately, no one is going to be punished for this. No one is going to go to jail for this. No criminal charges will be brought up against any bank on earth. All they'll do is pay a fine. We understand what happened with Deutsche Bank admitting manipulation here and there with regard to the precious metals. They're going to apparently rat out other banks as well. Nothing is going to happen. Nothing. Nothing at all. It's kind of like how Hillary Clinton will never be indicted. They can't. It's the same thing.
Yeah.
It's the system. The system is absolutely rigged, but that does not mean, and I can't stress this enough, that the free market will do its job beyond any doubt. And there is the collapse right there. It's just the market establishing fair value.
The system is dependent on rising prices, the stock market going up, assets going up, and that way they receive more taxes, and the investments that are being made, all the speculation that is out there, it's all dependent on rising prices, this environment. So I'm wondering, how much have the powers that be benefited from the stock market going back? The Dow now over 18,000, and the S&P over 2,000. Well, how much is the system benefiting from the rising market, in your opinion?
Well, this is what they always do, and I've said this over and over again. The Federal Reserve is a serial bubble blower and burster. They do this on purpose. It's a way to steal wealth from the middle class, who is the most invested with regards to 401ks and retirement plans. They blow up these bubbles, and everyone does really well. And then right at the top, when no one really expects it, bam, they allow the bubble to burst, and there's the wealth transfer as the market simply finds fair value. So this is how they cover themselves. They say, this is just normal action of the market. It's not normal action of the market. We cannot have normal action of the market in an environment where the debt market, which is the largest of them all, is being manipulated. Everyone knows this is true. So anyone who can sit here on CNBC, Bloomberg, pick a channel on the mainstream that says, oh, stocks are fair valued. How can you say that when the debt market is being deliberately suppressed and manipulated? We know this for a fact. It's unbelievable to me. The powers that be, the world central banks, will not allow the free market to determine the fair value for debt. So if the market is not being allowed to determine the fair value for debt, nothing is real. I can't stress this enough. We're in economic and financial fantasy land, period. And it is incredible what they have manifested and allowed to create. And most people simply walk around and have no idea about any of this and how this is going to unfold, just like last time. But this is going to be worse by magnitudes compared to 2008.
Greg, why do politicians even talk about raising taxes when they can just get more taxes through the hidden tax of inflation? Just pedal to the metal on inflation instead of pandering to, I don't know, the middle class or the poor. I don't even know what you want to call it, and talking about raising taxes on the rich or just raising taxes in general. Why not just put the pedal to the metal on inflation? Why do they bother?
You know what? They can't tell. Look, our politicians, all of them from the president on down here, they cannot and will not ever level with the people. I am more than certain that there are many in politics that understand exactly what we're talking about here and are direct players in this. And all they're concerned about right now, look, here's the issue. We're at a critical mass with no way out. There is no way out of preventing this market from determining fair value. So with that said, we know that there's no way out of a quote unquote collapse. And the collapse is simply the market establishing fair value. Now, these politicians are pretty smart people. They already are in the right places. They know where to put their cash. They know where to put their assets. They don't care at all about the general population because the middle class is being systematically destroyed. It has been going on for quite a while, and I can promise you that the end game here is an elimination of the middle class, which will not exist anymore when this goes down. Now, when that happens, when this wealth transfer effect happens again as the market establishes fair value, the middle class is going to be left literally desperate and destitute, looking for help. And that's when the government's going to step in. The government's going to say, okay, we have a solution here, so they can control them. That's what this is all about. Anyone who doesn't see that really is deluded, in my opinion. It's the writing is on the wall. It's everywhere. And I sadly can say here and with a high degree of probability and say the middle class will not exist in several years.
Wow. Well, it's happening to a step-by-step process. Little by little, we're seeing this happen over time. But I think in that collapse scenario, that revaluing assets to fair market value, there's going to be a massive moment in history which they can take over and do a lot of changes and be the solutions, quote unquote, to a lot of problems. And I think they'll gain a lot of ground in their agenda at that moment. So, Greg,
Absolutely.
Any last...
Anyone who doesn't... Yeah, just real quick, anyone who doesn't believe that what you just said is true is really missing the big picture here. And I can promise you this, there is no doubt in my mind that they already have a solution figured out. They already have this all planned out. Look, I don't care what people want to believe or think. There is no way to stop this market from establishing fair value, which is the quote-unquote collapse. No way to stop it. So with that said, people need to understand what they need to do. Just the last few words. I hope people are checking out my site, traderschoice.net. I made a lot of changes there. I'm posting all my new videos directly to my website. I have a nice chat room there now. I want people to get involved. And start talking about the issues that we spoke about right here. It's just so important.
Greg Mannarino, everyone. Greg, thanks for taking the time to come on the show with me today.
It's been great. Thank you.